Welcome back. Now, Barloworld has reported a downbeat performance with the revenue falling 6.9%, further resulting in a 12% decline in headline earnings per share from continuing operations. This was driven by subdued performances from Equipment Southern Africa and lower activity from VT. We're now joined by company CEO Dominic Sewela for more insight on the numbers. Thank you so much for your time, Dominic. Now, let's actually start off there with the challenges. What are the biggest external clouds that Barloworld is dealing with, and maybe particularly the ones that could persist for longer than anticipated?
Yeah, I guess, the best place to start is in a Russian operation. That has been, the war between, Russia and Ukraine has been going on longer than we thought it would.
Yeah.
And obviously, the sanction regime there has impacted our business. As you saw, we had to actually update the market in terms of the potential, export control violations in that part of the world. And we are now submitting on a voluntary basis, a report to, BIS, on the 3rd of March, and that's really, one area that is of concern. I think closer to home, we've got an operation in Mozambique. We hope those riots don't escalate into something more than riots.
Yes.
Because as we speak, we are not able to service our clients, and our, employees are not safe in that environment. And so, it's one area that's of, immediate concern. But I think if you then look at geopolitically, relationships between China and the US, do cause concern, because I think the pull and demand for commodities, in China, particularly if there's growth, prospect for China, can become, destabilized by
Yes.
the fear of, what do you call it, tariffs being imposed,
Yes.
On goods that are imported into the US from China. And that could actually affect, generally the global economy, because we as a heavy machinery business, we depend on construction and mining.
And I mean, Dominic, you lay out the table in terms of the different aspects of geopolitical tensions that you are experiencing, seeing that is filtering through to your business. And zooming into that VT, the Russian operation, at this point, because there seem to be a lot of headwinds there, are the risks not outweighing the benefits of keeping that operation at this point?
I think, that has been our thesis. Because, when you look at endowment, in terms of mineral resources of the Russian, Russia as a country, nobody can dispute that, in terms of resources, whether it be oil, minerals, and gas, So I think staying in Russia in the long term makes a lot of sense. But I think you've got to countenance that against the risk of violating US sanctions, where you may end up, suffering heavy penalties, and that's really something that we're dealing with, because over time we did say we'll watch, how things develop in that part of the world, and make sure that, our company and our shareholders don't suffer any financial loss. And so when we picked up this violation, which is more export control other than sanctions, not sanctions,
Yes.
is export control,
Yes.
which is part of the regime. So we felt it's very prudent that we take countermeasures to stop further imports of parts, which basically will impact, trading in that part of the world. And secondly, self-report. And by doing so, you're trying to mitigate any penalties coming out of that environment. But I think, the other way to look at this is a Trump 2.0. I mean, the president in waiting in the United States, if he follows through his promises, election promises, probably the relations, between Russia would improve. And probably he'll weigh in trying to get the two countries to a table where they could end the war. And in that case, our investment case in Russia can then be justified to say, there's no threats to sanctions. There's peace in that environment. Therefore, there's better prospect for us to continue to do business. Because Russia as an area, we've made a lot of money out of that operations over the last 26 years.
All right. Talking about making money, on the bright side, we did see Barloworld Mongolia, they're posting exceptional growth. Is the growth momentum for this operation set and solidified?
Yes, I guess, our business is very cyclical. I mean, because, cycles in commodities go up and down. But I think we've had, 2 years in a row of good trading in Mongolia. Unless, China, stalls,
Yeah.
I think we will see that business, grows next year. But I guess the biggest if is what happens to China, because
Yes.
all the commodities out of Mongolia are heading to China, and whether it be coal, copper, and all those. So Mongolia is very dependent on China at the moment.
Yes. I mean, yeah, the business is cyclical. And of course, with all the external headwinds happening, there has to be, muscle that you flex from within the business. So just internally, I mean, how have you navigated the headwinds here? Because operationally, I even spoke to an analyst earlier that actually said that operationally, the business was quite resilient.
Yeah, certainly it is. I think one of the key issues for us is having this geographic diversification, because if one area gets hit, the other areas are able to pick up. That's the
Yes.
first thing.
Yeah.
But those which we can control is really putting the cost lever.
Yeah.
Because it's important to be prudent on a cost. Secondly, make sure that the working capital is tightly managed. And lastly, making sure you've got a very solid balance sheet. And in terms of our capital allocation framework, those are the key levers that we always pull to make sure that we can weather any potential storm, so that when the cycle turns, we are well placed to take advantage of the growth opportunities.
Well, talk about where the cycle is right now, because obviously we are all invested in the potential takeover of Barloworld by the consortium that you do have an interest in at this point. Of course, I understand that you are in negotiations in hopes of snatching up Barloworld. Do you think that this is the perfect time to make that kind of deal?
Yeah, I guess I won't be able to comment, any more than what has been in the cautionary. And I think to an extent that there's changes in that regard or any movement, the company will be able to issue, via sense in an update. And I guess we'll have to wait and see.
All right. Well, as we close off the conversation, Dominic, just talk to us about what your focus is for the short to medium term, and if how optimistic you are about economic prospects at this point.
I think if you spoke to me last year, I was worried about South Africa.
Yes.
But post-elections and the government of national unity, I'm very bullish on South Africa. I think there's a lot of green shoots, particularly in terms of infrastructure. As a company, we've seen the benefit of it. In the short while, post the balance sheet, we've gotten an order book of about 800 million on the construction side, which has bolstered the equipment South Africa book from about 1.6 billion to 2.4 billion. That for me is a part of the green shoot. And if you live in South Africa, the backlog that we have on infrastructure. I think that augurs well. Lastly, in terms of consumer side, because of our ingrained business, with the interest rate coming off, we're likely to see consumer confidence rise. And with consumer confidence rising, the buying power will increase, and hopefully we'll see spending in the part of the world.
All right. Well, thank you. All right. Well, thank you so much for your time and giving us insights on those numbers, Dominic. Much appreciated. That was Dominic Sewela, CEO of Barloworld.